Over the last couple weeks, Bitcoin has fallen from 30,000 toward 25,000. Will the bulls be able to reclaim control and reverse the price, or are we going to see an extended correction toward the downside? Let's go ahead and find out. Okay guys, welcome back to the channel. I hope you're all having a fantastic day today. We're here to take a look at Bitcoin. The big question on everyone's mind is, are we going to see an extended correction toward the downside, or has the move down from $30,000 to $25,000 completed? Will we see a reversal develop? Before we get into today's video, smash the like button, hit the comment button, and subscribe to the channel. We go over the facts, the data, the technical and structural levels, the economic data, and the news events. No hype, no emotion, no BS, pure, raw, honest technical analysis. If that is the kind of content you like and are interested in, join us on Telegram, the second link down below for so much more of that. You'll get access to charts, updates, videos, educational posts, news events, and so much more to keep you in the loop with not only Bitcoin and cryptocurrency, but the economic climate as a whole. If you're interested in trading, you can join our VIP group. We have nearly 600 members. We post exact trading signals with justifications, charts to help you learn, entries, targets, and stop losses all detailed for you and laid out. Including that, you'll also get access to our group chats. We do exclusive altcoin analysis. You can see this is an altcoin analysis done yesterday on Link. You can see we do very extensive altcoin analysis with actual trading plans linked to those as well. Not only that, we'll have access to our trading and chart and education chat where we teach you guys how to trade. We teach you everything you need to know. And again, we have all of our members in here sharing their charts and ideas. We have a help chat to help you with technical information and a general chat just to talk banter, and crypto. If you're interested in joining the community, joining the VIP, go over to free channel, click all the information at the top via the pinned comments, and you'll find it all over here. Let's get into the video without further ado. So, starting off on the market data, we can see for the 24-hour period, Bitcoin has seen a 12.93% drop in 24-hour volume, dropping it down to around 64 billion. As for liquidations, we are sitting around 10% of that at 64 million, or less than 10%, sorry, at 64 million. This is down 55% in the last 24 hours. Looking at the June data, we can see Bitcoin is currently down 8.02%, actually overtaking last month's negative. So quite an aggressive red month so far for Bitcoin. We are about 15 days through it. The question is, are we reversing from here, or are we going deeper? We'll answer that today. Moving on, the volatility index on the 60-day period is pretty much unchanged, and the 30-day period for volatility index saw a little bit of a bump up, but more or less is very much unchanged. Moving on to liquidations, we can see the vast majority of these liquidations from 64 million came from shorts. We had a little bit from longs, but primarily from shorts. We did have a bit of a short squeeze toward the upside. If you did watch yesterday's video, you would have known we were expecting a move upwards to retest this rejection zone before potentially coming back down. We're discussing this in today's video. So we have seen that play out. If you did capitalize on that like we did, congratulations. Let's go ahead, guys, and talk about the broader market. So the DXY has officially broken down from its uptrend. Remember this uptrending support line we've been discussing? We said if we lose this uptrending support line, we can expect a move toward the downside that will continue. We saw a breakdown, we saw the price come up, we saw a support resistance flip, and we have seen a correction downwards. We are currently retesting a short-term support. And the short-term support, as per the DXY, is represented by this red zone. You can see numerous retests and rejections from this point. This area acting as an area of liquidity, a potential bounce point for the DXY. So I am looking over the next few days to see how the reaction occurs at this level. I do expect a possible bounce from this level, but as we remain underneath the uptrending support level, we do expect this trend to continue downwards towards this major area of support, unless we can break above the dotted trend line. Remember, if we break above the down sloping resistance, since this resistance is a higher time frame structure, okay, in comparison to this uptrend, this high time frame structure takes precedent of the macro trend if the price does break above. So it doesn't really matter if we are underneath this trend. Once we break above it, if we break above this level while we remain under this trend, this takes precedent. This trend line here takes precedent. We can expect the price to actually move upwards into this range. So again, the DXY is looking bearish. It is looking like it's moving down. It has been ever since it's lost its trend line. If it does want to reclaim strength, we do need to get above the dotted trend line. Moving on, the S&P 500 has had an absolute moon mission, but all good things must come to an end. It does look like the S&P 500 is now finding some resistance along the upper resistance of the rising channel formation. You would know a rising channel formation is a bearish structure, but while you were within the structure, you are moving upwards, right? It's an uptrend, it's an overall uptrend, but it does represent overall weakness in the trend. It does represent exhaustion. It does represent a structure in which most of the time breaks toward the downside. There's about a 72% chance these structures actually break toward the downside. Now, that isn't me saying that the S&P 500 is going to break down and continue, but according to structural probabilities, that is actually the most likely scenario. And therefore, while we remain at the top of these resistance levels, the risk return on longs via shorts are completely in favor of shorts. You are much better looking for shorts at these rejection points for pullbacks than you are looking for longs in hopes that the price actually breaks upwards and invalidates the structure. The reason being because the invalidation is a lower probability than the validation, and therefore shorts are favorable, particularly while we are retesting these rejection levels. So on the smaller time frame and the short term, I actually do expect the S&P 500 to pull back here. I do expect a move toward the downside, potentially retesting this prior resistance at around 4,300. If lost, I'd be expecting the price to move toward the confluence zone of the uptrending support line and this green level. Of course, as you know, if we do break a weekly candle close below the uptrend, you can expect a move toward the downside. If we break a weekly candle close above this uptrending resistance, you can expect this structure to be invalidated and the price to move all the way up to retest this high at around 4,600. So overall, it is looking okay. But again, if you flip the chart, you can flip your bias. What would you say to yourself right now? Flip the chart, flip your bias. If you had to look at this chart right now, what would you see? You would see a descending channel. Now, a descending channel is a bullish pattern, meaning you expect a break upwards. Therefore, would you be taking shorts at this position? Would you expect the price to move downwards from here or upwards from here? When you flip the chart, you can check your own internal biases. You can question if you make different decisions based on the visual rotation of the chart. It means your decisions are not based on data or fact. It means they are based on emotion or your own internal bias towards the direction you want to see. Moving on, guys, same thing goes on with Dow Jones over here. Not expecting too much. We can close over this level, very bullish. We can close below this level, very bearish, downwards, targets toward the upside over here. Let's get into Bitcoin for the main chunk of it. So today's video, the main thing is, are we going lower, or are the bulls reclaiming control, and are they going to bounce the price upwards? If we're going lower, how can we validate that? What are we looking for? If we're going to bounce and go upwards, how can we validate that? And what are we looking for? Then we'll go into the short term and wrap it up. So I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. Really quick summary, guys. Bitcoin has crashed from 30,000 right over here, 14th of April, about 20% or so, all the way down towards our major support. This level here, the weekly uptrending support, is a huge level of support for Bitcoin. It represents an over 300-day long support level. you can see we have come down and retested it. Not only does it represent a 300-day long horizontal support, it actually represents the weekly uptrend support. It is a horizontal level that represents the weekly trend support. The reason being is if we look at the point of which the weekly trend turned bullish, that was over here. In this instance, the weekly trend turned bullish when we broke above 25.2k, and therefore the weekly trend will turn bearish if we actually fail to hold this level. So at the moment, we are hoping that the price has come down. It has met liquidity. We can see on the VRPV, we have a huge spike over here in volume, representing an area of massive support. And this area will be defended for the bulls. That is what we're hoping for. But if the price does fall below it, we can expect the weekly trend to turn bearish, the trend to turn from a weak bearish trend into a strong bearish trend, and the price to go lower. Now, we'll tell you from a technical level exactly what we are looking for that to occur and for us to get warning signs of that occurring. But from a structural level, how do we know if the weekly trend has been lost? Well, from a structural level, we need to see a weekly candle close below 24.4k. If we close a weekly candle below 24.4k, the weekly trend will be lost and we can officially say the weekly trend is bearish. Until then, the bulls can still reclaim control. Support is support until it is not, okay? Resistance is resistance until it is not. You have to have your biases in favor of the most probable scenario, and probabilities lay in the data. So, the trend is very bearish right now. There is absolutely no doubt about it. We have been bearish ever since we retested here. We had bearish divergences playing out the entire time. Okay, it was very bearish, it was weakening, and we have been in a daily downtrend since. You can see our daily downtrending resistance represented by this downtrending black line. So first and foremost, before we can officially say any reversal has flipped the price bullish, we need to see the daily downtrending resistance break. We need to see the daily trend turn bullish. So when will that occur? Well, we need to see two things. Number one, we need to see the RSI break the downtrending resistance represented by this trend line over here. This will represent a momentum shift and thus a strength shift in price. Strength shift in price upwards, more likely to see the direction of price go upwards. And number two, we need to see, of course, a price action break above this downtrending resistance. Those two things are necessities. We need to see those two things occur. But there's a third thing now. We also need to see the price break through the $28,000 major resistance. You can see on the VRPV, we have a nice little valley over here, nice little jump up, nice little hill, whatever you call it, little peak, little mountain on the VRPV, representing an area of large historical trading orders and thus an area of large resistance. So now not only do we need to see those two things occur, we also need to see the price break above 28,000 and show strength above 28,000 for the trend to flip bullish on the daily. And we'll talk about a little bit more how we can see that occur on the weekly chart, what we can see for triggers for the price to flip bullish. So the daily chart, we need to see it occur, but let's go over to the weekly chart. How can we use the weekly chart to validate the next move? Okay, so from the RSI perspective, we have seen momentum shifts, and now we have seen negative momentum shifts and positive shifts. We can actually use the same point of which we had a negative shift occur to trigger a positive shift and thus a reversal in price action. So if we look at the RSI in the weekly chart over here, we can see a very key horizontal level, which is the 62 point on the RSI. Every single time we break from the top side down of the 62 on the RSI, we actually end up going lower, right? We saw over here, we saw over here, okay? As represented by price action, you can see from the red line down, we see this extended corrections toward the downside. We saw a 20 to 19% correction in this instance. But if we look at the green lines, when the RSI is broken from the downside up, meaning the RSI breaks to 62 from the downside up, we actually see the opposite occur. We actually see momentum flood back into the market on the weekly and the price action goes up. Now we can backtrack this in the whole entire history of Bitcoin. This has happened every single time. There is not, I haven't gone that far back over here, but I can go that far back for you. But every single time this has happened, we have seen momentum shift and we have seen the price action move in that direction. The only thing it doesn't say is how much gain are we going to see? What rate of return will we see from that momentum shift? Are we going to see a 50% jump? Are we going to see a 10% jump? But we always see a degree of the trend shifting because momentum is leading for price action. So if I want to validate the macro uptrend, if I want to see a higher time frame trend upwards, I am looking at the weekly chart, specifically looking at the weekly RSI breaking over the 62 point on the RSI histogram. When that occurs, I will know the weekly trend has flipped bullish. I will know the momentum has flipped bullish, and we are more likely to push upwards. If we do go back to the daily chart, it is hard to say what is going to happen first, but I would actually put my eggs in the basket that the daily chart will need to flip bullish before we see that actually reflect on the weekly chart. So it's most likely that the weekly RSI will break upwards after we have already flipped the daily trend bullish, but before we have broken over 30,000. So it will happen within this range. But it's going to be a determining factor whether or not we actually continue past 30,000 and go into a macro bullish uptrend, or whether or not we get rejected within that level. The next thing I want to go ahead and show you guys is for the bears. That's for the bulls. The bears do have a potential to go ahead and actually push the price lower. And I do need to bring up my indicator titles to show you that. If we bring up the Gaussian channel, we can see the Gaussian channel over here on the weekly chart. But I firstly want to show you the Gaussian channel on the daily chart. If we look at the Gaussian channel, we can see a few things. We can generally see the uptrends and the downtrends. The uptrend is represented by when the price is above the Gaussian channel and the Gaussian channel is green, and the downtrend is represented when the price is below the Gaussian channel and the Gaussian channel is red. Now we have two other scenarios. We have scenarios where the price pushes from the downside into the Gaussian channel and generally pushes through it, like over here, downside in, it pushes through it. Or we have scenarios where the Gaussian channel is broken from the top side down, like over here, and pushes below it. In fact, if you remember back to our videos back in May, we were saying one of the reasons why we expect the price to go down to 25.2 was because the Gaussian channel was actually broken from the top side down and therefore is more likely to continue downwards. The next key point of importance is the midline. And we can see scenarios where the price pushes upwards into the Gaussian channel and actually gets rejected from the midline. The midline is a key point of resistance and also a very, very key point of support on the charts. So let's go back to that weekly chart really quickly and discuss what is happening. So let's go back to the weekly chart. Okay, on the weekly chart, we can see the price action has broken through the Gaussian channel. What does this really represent? Well, it represents a weekly uptrend. It represents a shift in momentum from a strong downtrend being underneath the Gaussian channel to a weakening downtrend or a strengthening uptrend. That is what we have. We have a strengthening uptrend. However, we do not have a strong uptrend as the price is not above the Gaussian channel. So validation point number 2 for the bulls to reclaim control, we need to see the price break above the upper band of the Gaussian channel on the weekly. That will validate a continuation upwards as it has done in the past many times. However, if we do lose the midline of the Gaussian channel, which by no coincidence, you can see the price literally came down and retested it on the absolute dot. If we lose the midline, the Gaussian channel, that will signify the shift in momentum or strength that we had here was not strong enough to push higher, and we are weakening to the point of which the trend has lost its bullish strength, and that can push the price back towards a lower band at $20,000. So watch out for that, guys. If we do lose the midline, the Gaussian channel, if we do lose the weekly support on this level over here, that will be a perfect validation that we will be continuing down to retest these lower levels. Where will I be expecting the price to go? Well, we're looking at the horizontal levels. I'm expecting a retest around these points over here. You can see supports and resistances at around 22,000 to 21,400. That is worst case scenario. Until then, we are watching for reversals on the higher time frame at these points of validation, being the RSI break, on the weekly, of course, and of course, the Gaussian channel break on that weekly chart too. Want to see the price get above here for the price to continue upwards. So, really quickly, when will the macro chart turn bullish? When am I going to buy? I've said already, I have no intention of buying in weakness. I bought at 16,000, I sold at 30,000. The next time I'd be personally looking at buying is from a position of strength. I am not a long-term trader. I am not even a holder. I trade the markets. I swing trade. I scalp trade. I don't care what price I buy Bitcoin. All I care about is the return on investment I get after I purchase it. And when I look at risk return for making decisions, the best risk return I see is when we get a monthly close over 30,000. And therefore, at the moment, I'd be looking for monthly closes above 30,000 right now for a next move on the higher time frame. Now, that doesn't mean I won't buy lower, but that means I'm looking at that right now. Everything is up for change. If we do crash down 20,000, we see strength, we see possible reversals, things change. But as of right now, we are kind of in this no man's land. I don't want to be taking any positions at the moment for Bitcoin when it comes to spot buys or long-term positions. I'd rather buy from a position of strength, sacrifice a few percent, but again, we have that insurance because we did buy at 16,000, we did sell at 30,000, we made a massive profit, so we can sacrifice a little bit of that to buy higher when there is more validation and more probabilities that the price will actually continue in our favor. So let's go on to the smaller time frame, guys, and wrap up the video. As we said yesterday, we did expect a retest of this major level. Now, this is very important. We can see we broke down from this descending triangle pattern. We broke down right over here. You can see a massive correction toward the downside. We came up and we are retesting it. This is a very crucial level because if we do a support resistance flip on this level, it will confirm that this area that once was support has now been lost as resistance, and we will continue downwards. Now, if we do continue downwards from here, we are going to be losing the midline of the Gaussian channel. We are going to be pushing deeper into that daily support, potentially at risk of losing it, and that increases the probability of a downward move. So this level is incredibly important, even though it's only a short-term chart. It's very important what happens over here. If we do break upwards, we need to break upwards above this downtrending resistance. If we are able to break above this downtrending resistance, a little bit of pressure comes off the bulls. They get a little bit of a safety net because then this support over here becomes a support once more. If we do break above this downtrending resistance, we can expect the price to continue as high as the POC level, sitting at around 26.8K. Keep that in mind. What I'll be looking for that is, of course, a RSI shift. Look for a shift in momentum. Looking at the 4-hour chart, if I see the RSI break and pivot above this level, I would be expecting the probabilities to shift in favor of a break upwards as opposed to a breakdown. For right now, I'd still be expecting the price to reject and continue down until I see the data suggesting otherwise. Moving on to this chart over here, you can see, if we zoom out to the higher time frames, we had a perfect rejection from that 25.8K level, a very significant level. 25.8K to 26,000 is, of course, that daily resistance represented by this red area over here. This is an absolutely crucial level Bitcoin needs to get back above to flip the favor onto the short-term bulls. If we do not reclaim that level, we remain strong bearish on the weekly, we remain in this downtrend. The bears can continue to push the price lower. So we do need to break above 26,000. If the price is able to break above 26,000, we have a potential for the bulls to start building strength back up and pushing the price higher, potentially even flipping the daily trend. So right now, in a smaller time frame, I do not expect much to happen. In fact, I'd be looking for shorts at the moment still. If we do break above this downtrending resistance, I expect the price to push upwards, but I do want to see the momentum flip positive. If I get both of those things, I expect the price to move upwards, potentially as high as 26.8, but more likely we push into around 26 to maybe 26.2. Okay, keep your eyes on those charts, guys. I hope today's video has been informative in the weekly charts and giving you guys some key levels to watch out for in the coming weeks in regards to the overall trend and the bull versus bear bias. Thanks for watching, and I'll catch you guys in the next one. Cheers.